This is Anne-Marie Leake, Vice President of Communications for ePay Resources. Welcome to the Payment Space. Joining us today is Stephanie Hottle, Director of Payments Education for ePay Resources, and she's going to unpack some recent and upcoming ACH rules changes for us, how those changes will affect our members, and how they will enhance fraud prevention and mitigation, which we know is a top concern for our members. Thank you for being here, Stephanie.
Thank you for having me, Anne-Marie.
So let's start by taking a look back at 2024. Recap for us, please, what the ACH rules changes were that went into effect last year.
Okay, so there are a couple. So back in October of 2024, Nacha decided to expand the use of two return reason codes that we currently use today. So the first one that they expanded was the use of R17, which prior to this change was used when one of the reasons was that it was used for returning an entry that was coming into an invalid account that the RDFI believed was suspicious. So Nacha decided to make some changes to the terminology, and now the way an RDFI can use this return reason code is to return any suspicious entry. So that means a credit entry could be a debit entry. Those entries could be to a valid account or to an invalid account. The purpose behind this is, the industry was using it that way. We were seeing that RDFIs were returning entries with the R17 when they were actually coming into a valid account number. So Nacha said, you know what, let's make these changes to the way that these RDFIs are using them.
And they've been really good about that through the years of listening to the financial institutions throughout the country and hearing what are the practical changes that need to be made to the rules based on practices and financial institutions that really do make sense.
Yeah, I agree. They do listen. And so it's important when those requests for information or requests for comments go out, it's very imperative that the financial institutions respond to those, because Nacha does pay attention to them and takes into consideration how you feel about these potential changes.
That's an excellent reminder. Can you give us an example of what might be a suspicious entry where R17 would be appropriate now?
Absolutely. So this time of year, this is our busy season, tax season. And so a lot of financial institutions are seeing suspicious tax refunds coming into their members' accounts. So if you were to find a large tax return, or maybe tax return where the name doesn't match the account holder that entry is coming into, that would raise suspicion. And so if you are made aware of that, you could return that entry as R17. However, I do want to call out that the time frame has not changed for R17. So you still have a 2 banking day return time frame. So you don't get an extended return time frame with that.
Thank you. That was going to be my next question. The use of R06 was also expanded last year, correct?
It was. So that was our second return reason code that Nacha decided to expand. And this now allows an ODFI to be able to make the request to an RDFI to return any entry for any reasons. So any debit entry, any credit entry, the reason could be fraudulent. We're seeing a lot of business email compromise where our originators are sending payments out without doing that background check to make sure it's a legitimate request. And so in those cases, the ODFI has the ability to reach out to that RDFI and ask for them to return it back. Now, on the flip side, the RDFI does not have to comply. So if the funds are no longer there, that RDFI is not required to take a loss because of the warranties that the ODFI makes to the RDFI in the transmission of the entry. They're not required to take that loss. So that liability would fall on the ODFI. So that compliance remains optional for the RDFI, but there are some changes into 2025 that addresses that R06. So this is phase 1 of the expanded use of R06. It's April 1st this year. Phase 2 is going to come into effect. So what we're seeing in the industry currently is that these ODFIs are making requests to the RDFI and they're not hearing back. And so sometimes that's a problem. We need to be able to communicate. And so when these ODFIs make this request, as of April 1st of this year, the RDFI is required to respond to that ODFI within 10 banking days of receiving the request from the ODFI.
So does that response have to be a return, or can it be a response saying we decline to return it?
So the response can look like a couple of things. The RDFI can respond to say, hey, we received your request. We need to do a little bit more research. We'll get back to you. It could be the acceptance saying, yes, we are going to return this entry back to you. Or it could be a denial to say, no, the funds are not available. We are not going to comply and send these funds back.
Thank you for that clarification. So what other changes do we have in store for 2025?
A big change that I want to talk about is a newly defined term that Nacha has come up with. And this is really to cover those scenarios like the business email compromise, our vendor or payroll impersonation schemes that are happening in our world. And so Nacha has come up with a new term. It's called false pretenses. And what this means is that this is an inducement of a payment by a person that is misrepresenting either the person's identity, that person's association with, or the authority to act on behalf, or the ownership of the account that is being credited. So again, these scenarios that are applicable in these types of things are our business email compromise, those impersonation scams. So it really just helps tie into what we're seeing in our industry right now. So that is a newly defined term.
So that would be applicable to business email compromise. Are there scenarios where the term false pretenses would not be applicable?
Oh, absolutely. So we see where, we have poor quality of goods or services. False pretenses doesn't apply there. If we have fake scenarios, fake services or goods where, think of your puppy scam, your romance scams, things like that, that is not going to be covered under the false pretenses.
That's a fine line. I appreciate your clarifying that for us. So again, most of these rules have to do with fraud prevention and mitigation. Really appreciate you drilling down into these for us. And there are going to be some very significant rule changes in 2026 related to fraud monitoring that we will tackle in a future episode. But for now, if folks have questions, how can they reach out and learn more?
They can always reach us on our payments answer line. We have a number of individuals that are answering those calls, so they can call 1-800-475-0585 and select option 1. That will bring you to the education team. They can always visit our online platform, ePayU, to learn more. We have a ton of courses out there. A lot of them are free. A lot of them also have continuing education credits. So for those that are AAPs or APRPs, there's even NCP credits out there as well. Those courses qualify for those continuing education. And then, of course, our main website, always going out to our education storefront. We have a number of events that we post out there throughout the year. There's a lot of different things out there. For more detail, as far as the benefits and impacts that these rule changes have on the different participants, there is a blog that's going to be made available where you can read more about all of the changes that are happening, that have happened in 2024 and that are happening this year and in 2026. So look for that to get more detailed information about these changes as well.
Yes, many options for assistance from ePay Resources. Thank you, Stephanie, so much. And I look forward to catching up with you again soon on the 2026 rule changes.
Thank you, Anne-Marie. I look forward to chatting again.